Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 24th, 2022. I am Frank Ochoa, aka PivotBoss. We are seeing a tremendous sell-off here in overnight trading as Russia has launched a full-scale Ukrainian invasion. That has sent the cost of commodities soaring. Oil hit $100. And gold is fast approaching 2,000. We'll look at those charts. Here's a look at the ES dropping now over 2% here and dropping through the previous key range low. So when we developed this strong low and hit the midpoint, we had ourselves a new key range and mentioned that the best entry would likely be a trap down here below the key range low if we see significant rejection for an opportunity to bring it back across the key range down the way. Now, again, at this moment, we are seeing a full-on failure here of this low, and now we have to watch for signs of rejection. If we do not see rejection at some point here, we could see a continuation until we see an area where rejection may occur. And right now, 4,000 is the significant CLVN below. That major CLVN has been in play for a very long time. The one day it went through it was last year, April 1st, and it never traded that 4,000 level again. So that level may be in play to wipe out all of the gains from last April. So again, we could see a continuation to the downside toward that zone, but at some point here, likely sooner than later, we may see a significant rejection that could lead to a responsive bounce phase heading into early next month. Alright, let's take a look here at the NQ. The NQ also seeing a tremendous push through its key range low as well, and is now within a stone's throw here, just 900 points from the previous year's low. So not only has this thing wiped out half the previous year's gains here, it's already within striking distance of taking out even the previous year's net gains and all the way through those lows ahead. So again, we are now below the key range low of this impulsive sell-off. At some point down the road, whenever price is able to reestablish acceptance back above 13.7, there will be an opportunity to bring price back across the range towards 15K and towards 16K. Until then, right now we are seeing tremendous weakness, and we have to be a little patient here until we see significant signs of rejection. Once that occurs, we may be able to fade this for a responsive bounce back up toward 14K. Let's take a look right now at crude oil. Crude oil is up right now 7.7%, a range on the day of 8 points. It's 200% of average range, and we've been in a high volatility market over the last 10 days. Trading basically 4 points per day on a 5 and 10 day split. Today it's 8 points. Major push to the upside. It smashed through 95s and hit 154 cents. So $100.54, the new high. We continue to see tremendous strength. The inflationary period has pushed prices higher, and now tensions in the Russia-Ukraine conflict basically increasing price range now and pushing this thing to 100 for the first time in 8 to 9 years. So a tremendous move right now to the upside, and likely not an opportunity to fade it at the moment. At some point we may slow down and build a range, perhaps between 97 and 100 today. Build a range at these highs. Any failure to hold intraday VWAP could open up a bit more of a pullback, but right now very bullish, and will likely remain near highs as it builds out and digests this recent move. If we take a look at gold futures, gold up 2.5% and has reached the highest levels in over a year as well. This one right now hitting 1976 half today, and that takes out the previous year's high. This market had coiled up continuously 4 months and finally took out the previous year's close here, and that opened up a path to the previous year's high. Nothing else was a major pivot stand in the way. Right now, that's taken out the previous year's high. We still have the August 2020 high that's up here near 2100, but this is the highest levels we've seen in a very long time. And since that August 2020 high, you can see how this zone up here above 1950 has been heavily offered. We're now there now. Any rejection here could bring price back down, but this is such that we've gotten a major breakout from this huge compression phase, and any pullback could perhaps lead to an extension and further upside price discovery. So as long as price remains above 1920 here, we could see an attempt to continue higher. Again, any prices above 1950 have been heavily rejected over the last year and a half. So if there's a quick failure to hold 1950, that may suggest some sort of bounce back, and we may get ourselves a new key range. But a huge move right now for gold, now testing the previous year's high. If we take a look here at Bitcoin, this is going to be a major difference right here, is that while the broader market and equities are dropping, you'll notice that Bitcoin and crypto is also dropping as well at a heavy pace. Bitcoin down 5%, Ethereum down 8%, whereas the ES is down 2%, right? Russell 2000 down 2%, the NQ down nearly 3%, and gold is trading at the previous year's high very quickly. So the uncorrelated nature right now for Bitcoin and crypto to the market is kind of diminished, and you see gold coming through as a safety asset right now, as it's literally exploded here over the last couple of weeks into the previous year's high. So right now, crypto down along with equities, down and hit prices below 35,000 for the first time since that initial push downward. Again, we may not be too far off from testing the previous year's low and getting into that 25K. This may be the best buy on the board right now to hold off for that zone. Again, this is still, if you look at the broader profile here over the last year plus, this is still the lower edge of that range. So this is still a zone here that makes sense for a long-term outlook, but short-term we are still seeing heavy pressures, and we could still see a lower low failure at some point. But right now, 35,000 seems to be a major level of support that has come through numerous times. Over here, big push up, here, and now here, at least initially. Is this level 35,000 similar to what we saw last year around 29? Let's take a look at Ethereum here. Ether futures down 8% this morning. 8%. Right here, taking out 2,500 for the first time in a while. Getting as low today as 2,300. That's a big push downward again. We're not too far off from getting these lows and trying a lower low failure here. We still continue to trade in this wider range. But clearly we're not seeing significant signs of rejection just yet. We have to see a little bit more downside likely before we see some sort of turnaround. We could easily stay inside this range or even drop a bit more. Again, once we start to get, or should we get below 2,000 here, the likelihood of a rejection increases. You have a key range low here, you have a composite VAL right here, and you start getting below value into prices not seen in a while. That could provide a quick rejection and a move back to value rather soon. So again, while Bitcoin and Ethereum continue to look weak here, we may be coming into a point here where a short-term relief rally may be in effect. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.